Welcome to QAV 625 TK. It's the 20th of June 2023. How's the weather in Sydney, Tony?
We've been blessed. It's absolutely perfect. Beautiful winter weather. Sunny. We haven't had rain in weeks, if not longer. It's lovely. How's
Good
Brisbane?
golfing weather. Brisbane's been cool. It's been nice. I went down to the park with Fox about 5 o'clock yesterday afternoon so we could do the ninja course, as he likes to do, time trials on the ninja course. I had to wear a tracksuit. It's the one day of the year I actually wore a tracksuit outside because it was a bit nippy.
Did you have your best Brisbane tracksuit on? Was it 3 stripes, 2 stripes, 1 stripe? Yeah, good.
3 stripes, Adidas
3 stripes.
all the
Yep.
way. Yeah. The full Adidas, man. We're an Adidas family. Chrissy
the
loves
history.
nothing more than getting us all to wear Adidas. What?
You know the history of Adidas, don't you?
I have read about it. Yeah.
The Nazi history of Adidas.
Yeah. I mean, the Nazis made all the best stuff.
Yeah.
Say what you want about the Nazis.
They had good uniforms.
Yeah, they did. Hugo Boss uniforms.
Yeah.
The architecture. Shear's architecture. What I always say is, say what you want about Hitler, but at least he killed Hitler. The AORDs, Tony, is that a good week?
Yes, thank goodness, finally.
It's I feel like it's messing with me a little bit. I'm like, yeah. You want me to take you seriously, but I'm not taking you seriously. You've done this to me before, All Ords.
No, this time it's different. No, I'm good now. Yeah, well, there's the US market is getting excited that Jerome Powell's going to start to put the brakes on interest rate rises, and which means it brings the interest rate cuts that much closer. So they're all getting excited over there. I'm not sure. I think it'll be an interesting in terms of Australians' point of view. I think it's going to be an interesting earnings season coming up. When is it now? August. So a little over 6 weeks away, I guess. And just to see what kind of effect inflation's having on our companies. And yeah, where the market goes from there, who knows? Again, people are going to try and look through on crystal ball as to whether inflation is coming down, whether it's been tamed, and therefore whether interest rates are going up or down. And that will be the driver of the market, I guess. But, from our point of view, we're just plodding along looking at the individual stocks and how much cash they're throwing off.
Yeah, all the analysis I see by the pundits and the forecasters in the Financial Review and places like that there's another couple of interest rate rises coming locally from the RBA. So I know that the market's going to cry in its coffee when that happens. The girl is crying in her latte, as the Sparks said on their recent song. But anyway, it's up. I mean, I'm happy for an up week. At least I could buy some stuff this week. I think I finally closed out the light portfolio that I started at the end of last year. It's taken 6 months to finally get to spend all the money, after rule oneing stuff on a weekly basis and sitting on cash for a long time. And it's funny, we were talking last week about cash, and I want to talk a little bit more about that later on in the show. But here we were last week trying to figure out what to do with all the cash. I've spent it all this week. Yesterday and today, I've spent all of the cash that I was sitting on in our portfolios because iron ore is a buy. Woo!
Yay!
For how long? We don't know.
And again, it's kind of sentiment driven. The Chinese Communist Party came out and started to talk stimulus packages again for their economy, which the iron ore pundits took as being bullish. But the CCP also came out and said, hey, we're a bit dependent on Australian iron ore. Let's try and find somewhere else to buy it from. So maybe long term it's not that great. But in the short term, everyone, went woohoo.
Did you see the clip I posted on Facebook from the new season of Utopia talking about military expenditure?
No.
It's great. It's Rob Sitch sitting in a room with all of these generals and guys in suits. And they're looking at this massive military budget increase that we need. Got to spend billions and billions of dollars. He goes, and why do we need to spend all of this money all of a sudden on defense capability? Oh, to protect ourselves against regional players. He goes, well, which regional players are we protecting ourselves against? And they're like, oh, just regional players. No one specifically. He goes, I'll say a word, I'll say a country, and if you agree with it, just nod. All right. And he says China, and they nod. He says, right. And why do we need to protect ourselves from China? What is it we're actually protecting? And they're going, oh, just general capability, blah, blah, blah. He goes, I'll just nod if I say something that you agree with. Is it our trade routes? They're all nodding. Yeah, we need to protect the trade routes. You're right. He goes, and who is our number one trading partner in the region? Would it be China? Yeah, he goes, so we're spending this money to protect ourselves from China interrupting our trade with China. They're like, yep. It's like, all right, makes perfect sense now. Anyway.
Yeah, I've seen that one before. I must have seen it on the episode.
Oh, that's not a new one? I thought that was a new one.
No, it's an old one, I think.
Okay. Iron ore's a buy, so that FEX, FMG on our buy list this week. CCP became a buy. Our old friends CCP and FMG. It's all like gold times. The good old days are back. Tony.
Yeah.
It's 2019 all over again.
Well, it's funny, like after doing this for decades, you do get the same names cropping up on the list all the time. Plenty of other new ones too, but yeah, they fall off, they come back on. They fall off, they come back on. Yeah.
Fortescue Metals and the Chinese Communist Party, CCP, or Credit Corp, the other CCP. So that's, I was able to get rid of nearly all. There's a few $100 left in some of the portfolios, but nearly got it all. Speaking of which, I did post this on the forums, etc. And I spoke to you and I spoke to Stephen Mabb after last week's show. We were talking about Stephen Mabb's suggestion of that we take our cash and we put it into Betashares AAA ETF. When I went to do that for the light portfolios last week, I suddenly realized that we're not playing with a lot of money in those portfolios. We started with 20 grand capital for each of them. And so I'm sitting on 2, 3, 4 grand in cash, was last week anyway. And I realized that if it's paying a 4% annual dividend, less a small fee, and it gets paid out monthly, and if we were really buying and selling shares, like these are dummy portfolios, but if we really were and we had brokerage costs every time we bought and sold something, I needed to factor in the brokerage cost into what the amount of money that we're going to get out of this thing. And I did a spreadsheet to work it out, and worked out that you're doing $20, like let's say you're using Self-Wealth and it's $10 brokerage in and out, so $20 every time you buy and sell one of these ETFs, and the dividend is returning, let's say you put in $3,000. If you bought $3,000 worth of AAA, it would be returning about $2.30 a week. So I'd need to hold it for at least 9 weeks in order for the interest, the dividends, to neutralize the brokerage costs, let alone profit from it. And 9 weeks sounded like a long time for me to be sitting on cash. Usually it might be a couple of weeks here or there, but you don't really know. It could be a day, could be 6 months. But I decided, so I spoke to you, I spoke to Stephen Mabb, and we kind of agreed that I did the spreadsheet and worked it out. I think the minimum you would need, again, if you're using something like Self-Wealth or low cost brokerage play, then you would need to be at least buying $30,000 for it to work out if you're holding it for a week. Any more than that, you're in the money. So just keep an eye on that, folks. If you have to go to cash again and you're thinking about putting it into something, just make sure you factor in your brokerage costs.
Yeah, and the fact that it pays a dividend on a monthly basis, and you may not even get a dividend if you only put it in there for a couple of weeks. So yeah, all those things are part of the mix. So yeah, it's been interesting. It's thanks to Steve for highlighting it to us. I guess it's got a place and a use, especially if, like these days with interest rates being so high, I actually wonder if it's only going to be 4% paid monthly, that will suit some people. But I did a bit of a dig around on the internet after we had that discussion, and I went as far as Macquarie Bank. They're offering 5.1% now just for depositing for, I think it was 3 months. So there's certainly some decent interest out there if people have some money they want to tie up for a short period of time.
Right. This is the gets back to the yield curve.
It does, yeah. The interest rates are rising, so deposits are paying more. And there's been a deposit war going on. We've talked about the mortgage war, but there's also a deposit war, which Macquarie Bank, I think, is probably winning, which is attracting customers to their bank away from the other ones.
Chillins, I remember the Great Deposit War of 2023. Well, according to the Financial Review, Tony, boards around Australia think we're about to have a recession we have to have again.
Oh, what a terrible term that is. we don't have to have it. Did you see what I posted? There was a graph, and I think it was the Financial Review, might have been in one of the email services I read, but it said that of the current inflationary amount, there's two types of causes for that inflation. One is supply driven, one's demand driven. We spoke about this last week. Supply driven is all the things that we spoke about, which are energy prices and imported goods and things like that, where the price is high, but and I think transitory, but that's making up more than half of the current inflation, which means that demand driven inflation, which is the cash in people's pockets looking for a place to spend, is only 3% of inflation. So that's within the 2 to 3% range the RBA's charged with looking at. So why on earth are we raising interest rates to try and kill off something which is transitory, when the underlying demand inflation is probably transitory as well as the COVID cash dries up? But it's still within the acceptable range.
Yeah. Hi, Al.
Hi, Al.
We're running a bit late, so
hello. That's all right.
We always do.
Yeah, we chit-chatted too much. Can you hold on while we get through the jibber jabber stuff?
Yeah, of course.
Thanks. Yeah, in this article, Tony, I read in the Fin a couple of days ago, boards sound alarm on a recession we have to have. Says directors from major companies, including Telstra, NAB and Coles, warn a recession might be inevitable, but say that avoiding government giveaways and wasteful spending and lifting productivity would lessen its severity. Leading company chairman Graham Bradley has described the economy as poised precariously on the cliff edge of recession. I wonder if ChatGPT wrote that for him. Telstra chairman John Mullen has rated a recession a 50-50 chance, and Sydney... He's rated it a 50-50 chance. Well, either we're going to have one, or we won't have one. Oh, man, that's why he gets paid the big bucks, John Mullen, Tony. That's not everybody can come up with that kind of reasoning.
So how come the headline isn't large cap CEO sits on fence or large cap chairman sits on fence?
This is why you got fired from being the editor of the Financial Review, Tony. It was when you making those sorts of calls that got you fired. Telstra chairman takes $1 each way. Really? He's like, yeah. Look, from my position on top of the ivory tower, I can tell you with extreme level of confidence, we're either going to have a recession or we won't. I mean, it's really that simple.
Yeah.
Sydney Hydro director Tony Shepherd warned that the resources sector won't save us this time from another recession we may have to have. But later on, it was quoting Boral director Jacqueline Chow. And it also said, Miss Chow, a director of Coles, Charter Hall, Boral and NIB. I was like, can't she get a real job? She's a director of 4 companies.
That is a
really?
real job. That is a real job.
Just director of everything?
Yeah.
Do you think she has separate business cards for each one of those?
She's made it into the Directors Club.
Ah, the Directors Club.
Yeah. That's the one where if there's a vacancy, they ring up and say, this person who's on your board, how does she vote? With you or against you? Oh, always with us. Oh, great. You're hired. You're on our board too.
Not casting any aspersions, Osmond. Yeah, you're speaking generally. No. Yeah, broadly. That's what happens. Said she had shifted from a quiet confidence Australia would not experience a recession to a moderate concern that it would.
A moderate concern. So the headline is Director in search of a day job calls moderate concern on the economy.
Representative of the gig economy, Ms. Chow, who has 4 jobs because she can't get paid enough from one, says, but later on, she says the federal government needed to avoid making inflation a self-reinforcing problem, including with budget measures to help support households. So I thought that spoke to your comments over the last few weeks about it being a self-reinforcing problem.
Well, it is, but it's the RBA raising interest rates that I think is the flywheel that's reinforcing it. It's not the government helping people who, are on very low incomes either get a basic wage rise or get some energy cost reduction through some handouts. I think that's exactly what should be happening. It's the RBA who shouldn't be raising interest rates, I think, is the problem.
Yeah.
Yeah.
Well, there you go. But as you said earlier, we just keep doing what we're doing, trying to find companies that generate a lot of cash that we can buy at a discount.
Mm-hmm. Yep.
Another article I read in the Fin, meet the young investors who are semi-retired at 27. I'm not one of those, but it just has some more stats on investing in this country that I thought were interesting. We've seen a couple of these in the last couple of weeks. Where's the interesting bit here? The ASX, this is based on an ASX study. Instead of spending time replacing chess, they decided they go to a study. I wonder if they use blockchain to do this study. The ASX study found 57% of lapsed investors pulled out due to changes in personal circumstances. And among female investors, most, 48%, said they would consider returning to investing when they had fewer financial commitments. I find that's the way life works. I always have fewer financial commitments.
How much did the ASX spend on that research? I've stopped investing because I can't afford it.
No, they did.
Is there another reason?
Paid for it with Bitcoin, Tony. It's all good. Of the lapsed investors, 21% plan to return in the next 12 months, up from the 16% with that plan in the 2020 report. Miss Lee plans, as somebody they're talking to here, Miss Lee plans to return to the share market in the next month or two. I'll go more towards ETFs at this point, she said. I thought this is interesting because we've talked a lot about this over, I guess, the last few months. The market's been tough. We were talking about this off air. It's been I think when I looked the other day, the ASX or the All Ords was down 6% over the last 2 years. It's been like one step forward, 2 step backwards. And I think all of us have felt the pain in our portfolios. I know you have, I have. It's been really hard. But what did you call it before? The Rule 1 death spiral.
Yep.
You buy something and then you have to sell it because the market goes backwards, and then it goes back up and you buy it again and the market goes down, and again you buy it and then it goes down. And it's been sort of a crazy period. But people tend, I guess it's human nature. If you don't have a system, people just tend to throw their hands up in the air and go, "Oh, this is not working out. This is too hard." And I'll go back in when the market's settled down. I'll start investing again when the market's settled down. But as we know, you only really know that the market has settled down once you have some hindsight, right? 6 months later, you go, "Oh, like." We were joking before that the All Ords has been up this week or over the last 7 days, and it's done that before and then turned around. But at some point, it will keep going up, and it won't be until 3 months later you'll go, "Oh shit, look at that! It's
been a good run,
going up." Yeah, and you can get in then, but you've missed out on a lot of that early upside.
And that's the classic retail investor mistake of selling low and buying high.
Yeah. And you go, "Oh, well, my portfolio is down 5% or 10% over the last 2 years," but you'll make that up and then some when the market turns around. You've just got to be in it when the market turns around.
Correct. You could make it all up in a month if the market turns quickly. Yeah. No, absolutely. And you won't be able to pick it, as you say. So yeah, that's why we always try and stay invested.
And for people who are new listeners and haven't heard Tony talk about his history of annual returns, I actually dug it up the other day and I posted it on the About page of our website to make it easy to find, because every time people ask me for it, I can never remember where I put it. So if you go to QAV podcast.com, go to QAV podcast.
Oh, your chat GPT just went haywire.
That was 3 body problem as the aliens have intercepted our communications. If you go to qavpodcast.com.au/about, and you see Tony's returns over 20 odd years, we've posted them up there. You see that there are, good years, bad years, great years, and terrible years. And you just got to stick around for the good years.
Right. You don't know when they're coming. Like every year, the Fin Review will do an article where they poll the top 50 economists and stock pickers as to what they think the ASX will be at the end of the year. It's a dartboard toss. It's like, it bears no relation to what happens. So you can't know on January 1 whether to invest or not. You've got to just keep investing.
Yeah. Keep following the system. And you'll get there in the end. But it's a long race, and this has been a particularly tough couple of years, as I was saying. The market's been down for a couple of years now,
and it may get tougher if we do go into recession. I'll flag that quite openly now. We'll see.
All right, well, I just wanted to touch on that. It also said high value investors also apprehensive about risk. While operating with significantly larger portfolios, 1.45 million compared with 45,500, the survey found Australia's high-value investors, defined as the top 10% of investors by wealth and trading volume, are also worried about risk. More than 1/4 of high-value investors want guaranteed returns, up from 9% in 2020.
They're going to get it because, like I said, you can sniff around the ETF market at the moment and find some private debt ETFs, and they're going to return you high numbers. You can put your money into Macquarie Bank term deposits and get 5.1% risk-free. So, it's out there if you want it, but that's not how we make money.
Yeah. Said while 66% of high-value investors were willing to accept high or moderate variability in exchange for greater potential returns in 2020, by 2023, that had fallen to 48%. So from 2/3 to less than half of high value investors now, whatever 20%, roughly 20% less are looking for security, guaranteed returns rather than a little bit of risk and reward. So that's where we are in the market at the moment, according to the ASX study. People are nervous. People are feeling like they don't know what the future holds, but we are lucky because we do know what the future holds. Skynet. But apart from that, it's also we know that the market always turns around. We just need to be in it to win it.
Yeah, and it might go down first, so who knows? We know when we say we know what the future holds, we know what the future holds in the next 10 or 20 years if we, keep investing. We don't know what it's going to hold next year.
No. But we know that if we just manage our downside, keep investing in undervalued companies, we can get them at a discount, then...
Well, we don't even know what's going to... I should stop myself there. We don't even know what's going to happen in 10 or 20 years. We just know that historically, this is the best place to invest our money. Yeah.
And we know that historically, the market goes in cycles.
Correct. Yep.
May not always go in cycles. We can't absolutely know that 100%, but at least for the last 100 years, that's what's happened. It's gone in cycles.
I had one article I wanted to mention before we leave the news section.
Yeah.
And I'll just, I could get on a soapbox about it, but I'll read the headline and leave it there. Levy, the headline is from the Fin Review today, Levy slams ALP's bizarre failure on financial advice. Labor's bizarre failure to meaningfully reform the financial advice sector is leaving younger Australians stranded without guidance in a soaring property market and cost of living crisis, the lawyer who led the review into the system has warned. Michelle Levy said Financial Services Minister Stephen Jones's plan to adopt only 14 of the review's 22 recommendations would change very little about the affordability or accessibility of advice. The lack of clarity would also stymie innovation in digital advice by local outfits and stop big overseas players from investing in Australia, she said. Yeah, I'm not a fan of this guy, and I think he's every government has a minister for donations, and in this case, the Labor government's big donor base. Well, it's the trade unions, but also the industry super funds, and the review looks like favouring cheap advice only being available through industry super funds. And I'm a big fan of industry super funds. They've done tremendous things for workers in Australia or anyone in Australia and the economy. But, playing politics like this, I think, is a real shame. And we've heard this from our own members. If they want to set up an SMSF and they have to go and get a financial advisor to sign off on something that costs $4,000 for a signature, that's a big friction in the economy, which we can just do without. The Levy review would have gone a long way to stopping that. I think AI will go a long way to stopping that if it's allowed, but it looks like that won't happen now. So it's a real shame this review's been squibbed, and I'll leave it there.
You don't think AI will be allowed?
No, I think what's going to happen is industry super funds will be the only people allowed to offer financial advice cheaply to people, to their members.
I don't know how they're going to stop AI from giving people financial advice.
Yeah, well, who do you find?
Yeah.
When ASIC comes around and says, hey, you've been recommending stocks without a license, what do you do?
Mr. GPT?
Yeah. Sorry, does not compute.
I'm sorry, Dave. I'm afraid I can't do that.
Computer says no.
Yeah. All right. Anything else, or you want to do your pulled pork?
No, that's it. Pulled pork. Let me find my notes, though. Pulled pork today is an interesting one, actually. I went through the list, and as I said before, there are some items higher on the some stocks higher on the buy list than the one I'm going to talk about, but I have talked about most of those before. So as you were saying before, Credit Corp's back on. Virgin UK, I think I saw, was back on this week. I've done a pulled pork on those. So I've gone down the list a little way, although not too far, and I'm going to review a company I don't know much about. So it's been a good exercise for myself. The company's called VVA Leisure Group. VVA is the code. And we shouldn't confuse it with VEA, which is the Viva Energy Group, which is the Shell network of refineries. But and it's unusual to see the same trade name like this cropping up a couple of times, because normally the trademark register would stamp that out. But anyway, they must have sorted something out. Viva Leisure Group is not the network of Shell service stations. It's a fairly large network of gyms operating in Australia, New Zealand, and apparently they even have some franchise locations in India. So that was surprising to note. This one is a small ADT stock. They're trading at 43,000 a day on average. But I just something about, like, as we'll see as I go through this analysis, it suggests that might change, because the share price is off about 2/3 from its high a couple of years ago, and it's just starting to turn up again now. And as you'll see from the analysis, there are some reasons for that. So 43,000 might be too small for some of our listeners now, but it may grow. So watch this space in the coming months and maybe even years. So in terms of the business, there's 160 locations which Viva operates themselves, 160 gyms. And they also have a franchise network. They're the master franchisor for, and they're called the Plus Fitness Group. And there's some 175 franchise locations for them, as I said before, mainly in Australia, but also New Zealand and India. And just one thing about New Zealand and India, it's expanding overseas for Australian companies has often been a graveyard, because apart from anything else, just that extra travel component for management can cause problems in terms of keeping your eye on the ball. Like, technology's certainly moved ahead a lot since COVID, and we can do Zoom meetings now with people in India running gyms, but you never know unless you fly out there and have a look whether the actual gym behind the Zoom call is actually not a mess, and whether or not there's a competitor opened up across the street, etc. So there's nothing replaces the Australian management from going around and having a look at these places overseas, except the time and effort to fly to get over there. So New Zealand's not too bad. It's in terms of travel time, it's about the same as Perth. So it does add, it's a 4-hour flight. So you do lose kind of half a day at least, if not a full day traveling to have a look at those locations. India, you probably could string something together from Perth and make it maybe a 7-hour flight, but
can't you just get your guy to get Zoom on his phone and walk around the gym and then walk outside and show you what's on the other side of the street, walk up and down the street with his phone?
Yeah, absolutely. And that's, and the business graveyard's littered with companies that have relied on that. And then when they actually find out why they went broke, it's because the guy showed you the side of the street he wanted you to see and not the other side of the street where, a big US franchise had just opened up in competition with him. So anyway,
Google Maps Street View, Tony. There's my tip.
Street view. It's possible.
Look around, satellites, man.
Look, I'm going to list it as a risk. I'm not saying they can't overcome it and it's not working for them, but I've seen it before when companies feel the need to grow overseas, they can go through some pretty serious growing pains that can cause problems. And also, of course, not to mention the cross-culture issues going into a place like India presents, both good and bad. Anyway, so people may have heard of some of their brands. Their premier one their flagship one is Club Lime. But there are also many other ones. Jimmy Private Training, that's GYMMY. Club Lime Aquatic, Fit and Fast, HIT Republic, that's HIIT. There's a yoga chain. There's quite a lot. The company operates the largest non-franchise, in other words, corporately run gym network in Australia, and also is the master franchise for the large chain of franchised Plus Fitness group as well. So it's pretty big. They manage the Canberra International Sports and Aquatic Centre, amongst other facilities as well. Other interesting things of note, they've undertaken a buyback of up to 10% of their stock over the next, 12 months from May, so the next 11 months. So, that could support the stock price, but certainly it's also an indication that management sees some value in the current share price. The other notable thing that I pulled out of some of their presentations recently is that the gym business can be a knife-edge business in terms of volume, because if you've got a lease to pay and you're not getting enough memberships in, then your utilization, if your utilization rates are too low, it can be a negative problem for you. And in fact, the current results, the most recent results with this company show a loss. And basically that's because they've been coming back from COVID over the last couple of years and not getting back to full utilization rates, which they say is now happening. They also say that they're throwing off lots of cash based on where they currently are, and that they can fund their growth rates going forward from their own internal free cash flow. So that's a big tick in my book, and it's one of the things I like to see in a business, and I'll call it the flywheel effect. So they've started the flywheel up, and now it's turning by itself, and it's throwing off cash, which they can then use to make the flywheel go faster. So that's a really good thing to see in a business. What else can I say? Yeah, so the share price is now $1.29 that I'll do the analysis at, but it was as high as over $3 a couple of years ago. So the fact that it hasn't been running at full utilization since COVID has hurt it, but it's now back to full utilization and throwing off lots of cash. So I'm expecting to see it start to retrace some of that share price decline. The numbers, though, from a QAV perspective, and I'm doing this analysis at $1.29, which is way less than the consensus target, which is a good thing to see. The stock doctor health for this company is consistently been early warning for a number of years now, which I think is probably because of the fact that they have been losing money over the last couple of years. So it's been steady, hasn't been declining from early warning, so it gets a tick for that, but it doesn't get a tick for an early warning financial health and stock doctor. The prop CAF at the moment, though, is only 2.3 times, which is amazing given that it isn't a situation where it's been losing money while people come back to the office and back to the gyms. And a lot of these gyms are actually corporately branded. So, if you start to work for somewhere and they have a gym on the premises and it's a corporate perk, then chances are this company is managing it. So the fact that we're getting it for 2.3 times cash now is great, but I'd expect that to get even better going forward because it's going to keep throwing off large amounts of cash. IV1 is negative due to the loss. IV2 was 70 cents, so the share price is above that. Forecast earnings per share is greater than 300%. So the brokers that are covering this stock are saying that it's going to improve going forward. We don't have a PE, so I can't do a forecast earnings per share over PE to give us a growth score. But again, that will change with the next results, I think. However, book plus 30% for this stock is $1.27, which is roughly what the share price is today. So, expect it. I think it's $1.29 today, so it's just below it. So we're not scoring it on the basis of it being cheaper than book plus 30. But if it does have a couple of days where it drops down a bit in price, the score should go up on that basis alone. There's no dividend yield for this, which makes sense because they're growing and want to expand the franchise. So they don't score for that, but it's totally understandable. On an owner-founder basis, 26% of the shares are owned by directors. So that's a really good thing to see, I think. So we score it well for that. And it's just become a new 3-point buy. So it gets a score for that. We don't have a PE, so we can't say whether it's the lowest or not of the last 6 halves. And by default, we give it a score of 0 for that. And it hasn't had consistently increasing equity, not surprisingly, so we can't score it for that. So overall, quality score of 9 out of 15 or 60%. And because of the good prop cap, a QAV score of 0.26. So it scores well, reasonably high on the buy list. What are the risks? Well, I think competition always poses a risk from my experience with the sort of corporatized gym network business model. Peloton comes along and steals some market share. A celebrity franchise opens up and steals some market share. So there is always a risk of competition in this space. It can be, reasonably trendy and follow the latest trend. Although the big change usually can adapt and compete with that, but it does cause a problem sometimes. Obviously, recession and inflation are key issues here, although the company is adamant that their research is telling it that their members view this as a non-discretionary spend, a gym membership, and will stick. Again, that's not been my experience. My experience is that a lot of people will join a gym and then go 3 or 4 times and fail to stick. So that's another issue for these people as well. Utilization rate is the key metric. And if we do go into recession, I'm not sure what the balance point is for profitability for this gym, but if it falls off a little bit, that could cause problems for their profitability. On the other hand, for the positives, they are trending upwards with their numbers, so that's good. Having free cash flow funding growth is a terrific thing. So they're not going to have any indebtedness, which will see them through any sort of headwinds in the economy. And it just, just looking through the numbers and looking through their slide packs and annual reports, I get the feeling this is a well-managed company financially. To get them to a position to recover the way they have, to be funding growth through free cash flow, and to be undertaking a share buyback. It's ticking a lot of boxes from my point of view as to how this company's managed financially. So take a look, people. Do your own research, but it's one to have a look at, I think. VVA.
You didn't mention the biggest risk that they face, though.
Wing Chun. They can open up their own Wing Chun network, I suppose, couldn't they? No, what's the biggest risk?
You just covered them as a pulled pork. That's the biggest risk. MLX, though, you covered last week, is actually up a couple of cents from when we talked about it last week.
Correct.
When it's down a bit from where it was a couple of days ago, but it's still net up from when you spoke about it. So maybe VVA is safe. Yeah, we do own it in a couple of our portfolios too, VVA. It's in the double portfolio, a couple of the light portfolios.
Yeah, I don't own it myself, so I felt safe talking about it. Well, I mean, sorry, from a disclosure point of view, I didn't want to recommend a stock I was holding without declaring.
Too small for you.
Yeah.
Thank you, Tony. VVA. Well, now we're into questions, and we have a guest question asker on the show this week, making her, I think, second appearance on the podcast. First appearance?
I think she's been on one of your other ones before.
Really? Her first appearance on the podcast, I'm shocked that that is true. Coming to us all the way from the sunny suburbs of Melbourne, Alex Kynaston. Welcome to QAV,
Hello.
AK.
Thank you.
Nice. Do we sound different to what we normally sound when you're typing up the transcript? Yeah.
Yeah, super slowed down. I just finished the transcript at 1.75 times speed. It's really, it's strange. It's like trying to slow down my brain, taking in the information.
You're drumming your fingers on the table saying, hurry up, get to the questions.
No, I'm not. It's just, it's like 12 degrees in this room I'm in, so I'm a bit chilly.
Oh, you have to buy yourself a heater.
It's good. Yeah, sunny Melbourne isn't really that sunny.
No,
there is a heater. I thought audio quality, I didn't want to turn it on.
Oh, thank you.
Thanks. That's thoughtful.
It's okay.
So
I was also trying not to make any facial movements and set Dad off because see, doesn't take much.
You know where his funny bone is. You were just up in Sydney. You guys were just hanging out together, huh? You were up there. How did your affordable art show go up there, Alex?
Yeah, really good, thanks. I picked up a bug either going up there or among the thousands of people that were there, but it was good. You don't get to see a lot of art or that quantity of art very frequently unless you go to a fair like that. So yeah, it was a lot of fun.
And when's the Melbourne one happening?
I think it's August 31st to September 3rd. So I think that should be a Thursday to a Sunday. And I'll be the young talent at the Melbourne show. So yeah, it was good to work this weekend and get the lay of the land and see what's selling and what I need to whip up quickly for the Melbourne Fair. But yeah, it was good. Thank you.
I can't remember if we've mentioned it on the show or not, but in case we haven't, or even if we have, tell people what you're doing, what your young talent thing is at the Affordable Art Show in Melbourne.
Yeah, well, so I had my graduation show for my Masters of Fine Art at the end of last year, and I actually graduated properly from it about 2 weeks ago for my MFA.
Congratulations.
Thank you.
Master Alex Kynaston.
Yeah,
Doctor
of fine art.
Yeah.
It's okay.
The master.
Yeah, kind of. Anyway, yeah, so they found me through my grad catalog basically and invited me to be one of the young talent. Apparently the young talent at the Sydney show kept getting asked how old they were because everyone just assumed that meant high schooler. So I don't know if they're going to change the branding, but yeah, so I'll have a wall that I'll put paintings on to sell. So if anyone's in Melbourne, let me know and I can send them a VIP ticket for free. It won't make you pay for that, but
yeah. All right. Well, you can, reach Alex on our Facebook page if you're a club member, which will be everyone listening to it at this juncture. Now, Alex is going to read again a question that we had last week from Sue, because we didn't have the opportunity to answer it in detail last week. So over to you, Alex.
And sorry, just before you do, can I just add to the intro? I was talking with Jenny about the podcast and what's happening and the market and the rest of it. And she said, we dropped the ball in terms of trying to promote female investors into our network. And she thought a simple thing like even having a female voice on the show would help. And so we thought Alex would be a good person, ticking off both the females and the youth market. And we thought it might be an easy way of getting Alex to be involved in QAV to read some questions out for us. But Al, please feel free to add any other questions you have about these topics or any other topics as well. No questions too naive, and we'll answer them.
After doing the checklist for the last 2 years and the transcription every week, you probably know more about QAV than I do. So yeah,
you'd think it had sunk in.
Yeah,
I'm not sure I'm really processing it as I'm doing it.
Right.
No,
Okay.
It's been great. I've really enjoyed. Yep. Anyway, so Sue asks, "Hey Cam, what happened to C6C today? I noticed they have the meeting regarding the combination with the Hub Day with holders of common shares. Any idea why it dropped 15%? With the upcoming sale, would Tony still rule 1 this? Cheers, Sue."
Yeah, well, thanks, Alex and Sue. I think the sale is Hud Bay, not Hub Day, so typo there, but that's okay. So Al, you'll remember Hudson Bay from our time in Canada and the Canadian Shield
definitely.
and all the. Sorry.
Definitely.
Yeah.
Yep.
Yeah, and the Canadian Shield and all the mineral resources that Canada has, which is fairly similar to Australia. So C6E is a copper miner for people who aren't familiar with it, and they are merging with Hudson Bay, which is a mining company, or Hud Bay for short, over there in Canada. But the upshot is it's going to delist. In fact, I think it delisted on Friday of last week. So it's no longer available on the ASX, my understanding is. You're looking quizzical, Cam. You want to look it up while I'm talking, but I think it came off last week.
Yeah, no, I've got the share price open in front of me. I've got the stock chart open, but yeah, it sort of finishes on the 16th of June. Now I look at it. So yeah, right.
So it's been delisted. I think I'm not familiar with the takeover, but I'd be surprised if the current shareholders were now not listed with Hud Bay in Canada on the Toronto Stock Exchange, probably. And so their holdings would have been transferred. I don't know what the 15% drop was on that day. My guess, if I had to make a guess, would be that people are selling out before the delisting so that they don't get an overseas listing for a company they're not going to be directly investing in Australia with. So there's swings and roundabouts for that. If you like C6C and you like the merger and you've done your due diligence, then by all means stay in it. But a lot of people would have felt like it's a different listing overseas, different board, and they prefer to keep their money in Australia and do it here. And there's swings and roundabouts for that. I think probably the main issue why I probably would have sold out is that if it's listed in Canada, it's not going to get the same sort of press coverage or brokerage coverage it gets over here. So it kind of falls off the radar from a news perspective. And then you're just reliant on looking at the share price and trying to do your own Google searches as to what's going on with Hud Bay over there if you stayed in it. But that would be the only reason why I would sell. I know the ASX issued a speeding ticket. So a speeding ticket is a term for the ASX writing to a company formally under its rules of listing and saying, hey, are you aware of why the price dropped 15% on that day? And can you please enlighten us? And I'd say 99.9% of companies write back and say, we're unaware of any reason for that occurring, which is a bit of a farce, really. The ASX should be able to probe a little bit deeper and say, well, could it have been people selling out for this reason or that reason, and try and tease out an answer, but they don't. So it's kind of a useless charade they go through. But anyway, I think that's the reason. Would I have rule wondered? Yep. If it fell more than 10% below my purchase price, then I would have sold out. And the additional information there is I probably would have sold out before it delisted as well, rather than being an overseas investor on the TSX.
Well, if you'd sold out on that day, you would have kicked yourself because it bounced back the next day and closed above where it was before it dropped.
Right. Yeah.
And when the podcast went out last week, I got an email from Chris, one of our club members, who I think might be in New Zealand. He said, hi, Cam, regarding the latest podcast episode, a small cap newsletter recommended selling C6C on Monday. And I asked him what the newsletter was. It was stockmarket.co.nz. So I don't know how much of a role that played in it, but probably, depending on how big their readership is, could have been quite significant, along with the factors that you mentioned. They're moving offshore. So hope all that helps, Sue. It's a bit late, I know, sorry, but there you go. I
should also add too that listing overseas, some of the things I don't like about that from a personal perspective is you're managing currency risk and you're managing a different set of tax rules over there as well. So there are some issues. I mean, this merger could go gangbusters and the shares could shoot up and people who've transferred across could do quite well out of it because C6C has been a good company and we've had it in our portfolios in the past. So there's no reason to suggest just because it's merged with someone else it's going to go bad. But it's more just the fact it's listed overseas with different rules, different and currency risks and lack of visibility in the news that I don't like doing it.
And one less copper stock for us to invest
in.
Next time copper's on a gangbuster run.
Well, so, good job, Alex. Any further questions? Any follow-up questions on that one?
I guess the only thing that came to mind was, I mean, you've got experience in the Canadian market. Is it like a little bit safer if people wanted to invest?
Yeah, well, I'd never actually owned a stock on the TSX. I was investing on the ASX from Canada when we were living there. But from what I could see, it was a very similar market to the Australian market, both in terms of how it's operated and its rules, but also its makeup. So the TSX, Toronto Stock Exchange, is mainly resource-based and banking-based, bit like the Australian share market. So they're fairly similar similar countries from the economic point of view.
Oh, thank you.
Well, thanks, Alex. And you'll be back next week with more questions and your insights as our official millennial, Gen Z millennial
and female
spokesperson. Oh, and female, yeah.
That was the idea, right? The idea isn't I think I forget what the term is. It's mirroring. So
token female. That's
token female. Yeah, that's. I think the correct the correct approach is we're mirroring. So we want our listeners to mirror the people on the podcast.
Right.
Yeah, and I mean something that, like, there are a number of women that write in every week, so you definitely have an engaged audience base who are female. So. Yeah, anyway. Thank you. It's been fun.
Good. All right, Al.
See you later.
Thanks. Lovely painting behind you too, by the way.
Thank you. It's hiding rubbish.
No, it's great. You should try and sell that one at the art show.
Thank you. Maybe I will.
Or otherwise, I'll take it to Cape Shank.
Yeah, you can take it to Cape Shank. That's fine.
All right.
Okay, bye.
Okay, bye.
Thanks, Al. Bye. All right, that was fun. Next question from Reg. He wanted to talk a little bit about MLX, which you did as your pulled pork last week. You said you'd bought it, tin, and the stock now a buy, and the financial fundamentals looking okay were presumably the reasons. In his pulled pork, TK mentioned some issues around the tin market, China and Indonesia dominance, etc. When I do my own research, I decided not to buy it, mostly for the reasons Tony mentioned, which are expanded upon in Stock Doctor's review of the stock. I guess we all have different interpretations of what our DYOR will decide, and we have different tolerances to risk. My question is, issues about ADT aside, would Tony have bought it after he did his research?
Yeah, just want to clarify too, I don't own it. I think when you said before, Reg is saying I bought it. I think he's referring to you. You put it in one of the dummy portfolios. Yeah.
Yes.
Yeah, just for clarification. Yeah, so I would have bought it, Reg. I much prefer to rely on the figures in the QAV checklist and the commodity graph underlying it, and would be happy to buy it on that basis. I think trying to divine the tea leaves and the experts, even if they're experts, and what's going to happen with the tin market is a 50-50 game at best, probably. They get it right sometimes and get it wrong sometimes as well. But also, too, all of that research on what's going to happen with Indonesian tin mines and Peruvian tin mines is probably baked into the price for both the commodity and that company and this company. It's one of the risks that they're facing. It's a well-known risk, and it should therefore be reflected in the share price. So I'd be a buyer based on my own analysis without trying to, prognosticate about what's going to happen. At the end of my pulled porks, I do like to go through the risks facing these companies, because as value investors, we're buying things cheaply because there are risks around these stocks. And generally, I find that the reason why we buy these companies and overall do well, not in every case, but overall, is because the companies are financially very strong. They have lots of cash being thrown off by the current businesses. And that's the case even when they're facing the headwinds that make them unattractive to the general investing public. So that's, the basis of value investing. So the fact that there could be too much supply of tin in the market coming up is a possibility, but I think it's already reflected in the price, and we get compensated for that risk by buying it cheaply, by buying the stock cheaply.
Thanks, TK. Paul asked this on Facebook. He said he went to try and purchase URW, Uniball, and got the following error from NabTrade. NabTrade does not permit buy orders for URW.ASX due to foreign tax requirements. A stop trading ban is in place when creating orders for stock group NabTrade URW. Applies only to orders with trade action, buy. He said he rang the helpline, what he later on called some sort of surrender cheese monkeys, and they said the same thing. What gives? Anyone know? I do remember when I was looking into URW recently that they're a dual listed stock. I think the primary company's in the Netherlands or somewhere in Scandinavia or something. Do you know?
Oh, I don't know offhand, but it's Germany or the Netherlands, somewhere like that.
Right. And so any idea why NAB wouldn't be letting people buy shares in it? Have you ever come across that before?
I haven't. I've never heard of it. I did a little bit of research, and so here are the factors. I don't know if they're contributing to the problem, but the listing is a dual listing. And so the listing in Australia is a CDI, which stands for CHESS Depository Interest, which means that we're not actually buying the stock of URW in Australia. We're buying a proxy for the stock. And what they do is they basically staple our proxy to a share that's bought over in Europe on a one-to-one basis, usually, although it might be a different ratio in some circumstances, like 10-to-1 or 20-to-1. But if you buy a holding here, it's reflected by someone buying a holding over there. And it means, though, you don't actually hold the beneficial ownership the same way you do if you buy BHP, or I shouldn't use BHP, it's still listed too. If you buy Credit Corp, which is only listed in Australia. So if that goes on the CHESS system, and it's yours as an asset, I guess. In the case of CDIs, it is held on your behalf by a custodian who does the other buy for you in Europe, and then keeps the shareholdings matched up for you. So that could be a reason that NAB doesn't like doing that, or physically can't do that. It's also possible. I noticed in the ASX notifications for URW, there's been a few recently, and they tend to come through in flurries over the course of the year, where things like options are exercised, and they have to notify that there's a bit of a mismatch in the CDIs for a while, and then they line up again because they issue more shares here to match whatever's happened with share issues in Europe, like options being exercised, or they might be issuing shares for some kind of capital raising. So it's possible that the person, Paul, who questioned this, may just have been stopped from buying during a trading halt period while the shares are matched up again with the CDIs. I'm really not sure. I'm just grasping at straws here, but it is a bit different to most shares in that it's a CDI, and that could be the reason why NAB doesn't allow it. But I've never come across the problem before.
Well, URW, Unibale Rodamco Westfield, is Westfield Shopping Centres, basically. Headquarters in Paris, according to Stock Doctor. According to their website, Unibale Rodamco Westfield is an owner, developer, and operator of sustainable, high-quality real estate assets in the most dynamic cities in Europe and the United States. No mention of Australia.
No, because I was going to do a pulled pork on this, but URW actually hasn't quite crossed its second buy line yet, so I didn't do it. But I suspect it'll come onto the buy list in the next couple of weeks if it keeps trending the way it is. It's basically when the Lowies who started Westfield sold out of Westfield, they sold the Australian, they sold the overseas business and kept the Australian business, which was rebranded as Centre Group. So that's why it doesn't include the Australian businesses. Yeah.
And it's one of those stocks that's been on our buy list forever. And it's been at the top of the buy list for months and months. And I think its QAV scores like 6.
Yeah.
Or something ridiculous like that. But it's always been a Josephine. And as you say, it's nearly back over its second buy line. So I'd be interested I've never really drilled down into it, but when you do a pulled pork to see why it has a QAV score of 6.
Yeah, I'll be interested to see it too. Yeah. I mean, historically, Westfield was a wonderful business, and was, I think, one of the pioneers of separating the real estate assets and the management fees separately. So we're talking, if URW has the same structure, and I haven't looked at it for a long time, then we're talking about a company which has put the real estate assets into a trust, which you can probably find somewhere listed overseas, and invest in the real estate if you want that steady income. But the management fees can be a much higher earner because it's capital light, and they're getting the fee income from leasing the stores and the business. And so it's got a high, well, traditionally that's had a high ROE because of that. And it's been a good business. Westfield's been one of the success stories on the ASX since the 50s.
There you go. Well, I hope you do a pulled pork on it one of these days. Last question. It's from Ed. Ed, the global jet setter, globetrotter, says they've been watching the teasing done with buyers and sellers in the market depth section of Self-Wealth. I mean, who sells one unit, let alone 11 or 12 at $19.31? That's $231. Seems to be cat and mouse. This was CCP at 12:30. And he says, Cam, I know TK uses Alex to do his trades. Not your daughter, Alex, but
no, Alex Hayes. Yep, from AORDs. Yep.
So may not know the answer, but wondering, is there any lessons in here for us rookies?
I don't think there is. What are we seeing here? So the first question, I guess, is who sells one unit?
So he sent us some screenshots of the market depth. And yeah, like there's one parcel, 12, 11, 2, 21, people selling really small parcels of stock.
And this is CCP, so the price is around $19.30 a share. So the thing I did notice with those, the screenshot we've gotten has all those small parcels, but for the part of the market it's shown, there's 192 buyers, which represent 66,500 units. So that's still $1.27 million we're talking about, that's being displayed by Self-Wealth as the market with the price. So this is the buyer side of things. So it ranges from people who want to pay $19.30 for the stock down to those who want to pay $19.21 for the stock. So a 9-cent spread over what's being shown in Self-Wealth, but 1.27 million, which is quite a bit. So I guess if I were to buy shares, Alex would go in and I'd tell Alex, please buy it at market. He'd go in and soak up all these small parcels and give me an average price, which would be somewhere in the middle of that 9-cent spread. So between 19.21 and 19.30, or because he'd soak up a lot of that to buy, if not all of it actually, just to buy shares for me. So yeah, it's worthwhile paying attention. Who's doing those small parcels? Could be day traders, was my first thought. They're in the market all the time, trying to play a cat and mouse game with someone to make a small profit every day, which is a bit of a grind, but that's happening. I don't know if that's the case. There is also a thing with a lot of investors, which they call small unmarketable parcels. So sometimes people get caught out either because they haven't been exact with their buying or selling, and they're left with small parcels of shares, which they just, tell their broker or put an order in for to get rid of, just to tidy up their portfolio. And sometimes, people will have seen that occasionally some large companies will offer a facility to sell unmarketable parcels, which they'll just either buy back themselves or facilitate a trade without a broker, and therefore you save the brokerage. And that's the interesting thing about someone selling $231 worth of Credit Corp shares, is if they're paying $10 on that, it's eating into their, potentially eating into their profits. So that's a thing. Can't give you any more help than that, Ed. Don't know what's causing it for Credit Corp. It might just be a Credit Corp thing that they have a lot of small shareholders, which sounds strange as well. I don't know. And that can happen if the base is skewed towards retail shareholders rather than insto shareholders. But yeah, so I guess the lesson, be careful if you're putting an order on at market. It'll start to hoover up the the lowest sell price that people want to sell, which will be the highest buy price for you in the market. That may be an issue for you. So if Ed's going in and nominating a price, that won't happen, but that's also quite mechanical and time consuming if he's buying a large parcel. But in terms of how it affects me, it doesn't. I just say to my broker, buy at market, and he hoovers up all these small parcels, and I get the average price at the end.
I see he sent us a couple of screenshots. One has sellers offering one parcel, one share, 2 shares, 12 shares. And then he sent us another screenshot of buyers, 1 share, 2 shares, 12 shares. My guess with the buyers was that it was Stephen Mayne buying the 1 shares.
Could be. The famous largest small holding portfolio in the world. Yeah.
And he buys 1 share so he can get to go to the AGM and cause trouble by asking directors questions that the financial media said. We've had him on the show before, founder of Crikey, got himself into a bit of trouble, had to sell it. But, that's what he does, right? He goes and he's sort of like board activism. So what they call
also, activist shareholder. He goes on to ask the questions. But it could also be, computer-directed trading. That's also possible. So automated trading that is trying to, again, eke out a small profit from a large lot of transactions. And it's only buying bits and pieces here and buying and selling bits and pieces because Credit Corp it's a reasonably large stock, but it's not amongst the top 20. So it may have to, their algos might mean it only does trading in small parcels. I don't know. Sorry, Ed, I can't offer a reason.
ChatGPT slowly building up a position under the radar so no one notices, and then all of a sudden one day it owns everything.
Yeah.
Well, that's the show for this week. Apart from after hours, people who don't want to listen to us talk about other nonsense, you feel free to terminate the call. But for the rest of you, we're going to talk about other nonsense, non-investing nonsense now.
Which is often the part we like the best, isn't it?
It is. That's the fun part. Really.
Yeah.
Investing's boring. We get to talk about other stuff. For me, the final episode of Barry, we finally got around to watching the other day. Bill Hader's series, end of season 4. Apparently the finale came out on the same night that the Succession finale came out, but we just caught up to the end of it. Really good. Have you watched any of Barry?
I've watched the first episode, but I haven't cycled back to do any more. I've got quite a long watch list, thanks to After Hours and your recommendations.
Yeah, it was a really good show. Like, we were huge fans of Bill Hader from his SNL days. He was a very, very funny guy, big fans. And, Barry's a funny show. For people who haven't seen it, he's an assassin, basically, for hire, ex-US military, broken individual. And he decides he's going to sort of fix his life by becoming an actor. So he joins an acting school run by Henry Winkler, the Fonz. And it started off as a black comedy. But as the show went on, it became less and less funny. And in the last season, and I think most of the second half of the third season, it's just really, really bleak and dark. Like the humor, there's still bits of humor, but it just, it just went, forget the humor. We're going really dark and dramatic now. And I think that's how Bill sucked us in as the audience, because we know Bill's funny, even though his character wasn't really funny ever in it. He's, the comedic relief for the other people in the show, not really him. But, it's Bill Hader. If you're a fan of Bill Hader's, you expect to get some laughs. And he was the co-creator and writer and directed all of the last season, all of the episodes in the last season. But and is the star of the show. But as they went through it, it was just like, no, okay, we don't have time for comedy. This is a drama. And it was brutal, absolutely brutal.
Has he been reading the Bob Odenkirk book, Comedy, Drama?
Drama, yeah, probably. That was a good book. Did you read that?
I haven't, no.
I did. I liked it. Big Bob Odenkirk fan. Yeah. Anyway, so we watched that. We haven't really watched anything else. But I've been rereading. You may remember this from the old G'day World days. In 2006, I read the best book I've ever read about artificial intelligence, It's called The Metamorphosis of Prime Intellect. Did you ever read that?
Oh, a long time ago. When you mentioned it, what, 10 or 12 years ago, I think.
2006.
Oh, okay, even longer. And I had to go and track it down somewhere strange on the internet to get a copy too.
Yeah, what hadn't been published at that stage. He wrote it he started writing it in 1982. Then he finished it in 1994 and it went unpublished. And then he put it online in 2005 or 6 or something. Somebody told me about it and I downloaded it and read it, loved it. And then it did get published, I think some years later. So it's available on Amazon now. And I had him on the show in 2006. I tracked him down. He was a nightmare to track down, but I interviewed him. Anyway, I've just been rereading that and really enjoying it. It's about the third time I think I've read it in whatever 17 years. But of course, you know, with everything going on. So basic, for people who have never heard of it, basic, it's a story of a guy who creates an artificial intelligence, and then it sort of improves its own architecture and becomes sentient and also has control of matter. It's sort of figures out how to turn itself into a quantum computer, and it upgrades its own chipset. And then it's all of a post-singularity thing. Basically, because it has the Asimov's 3 laws of robotics built into it, it's not allowed to harm humans, and it's not allowed to allow humans to come to harm through inaction. And then it sees that people are dying in hospitals of old age and cancer and whatever, so it just cures them. And then it just basically prevents people from dying. And so humans can have anything they want. They just have to ask Prime Intellect for whatever they want, and it'll create. It has complete control over matter. It can create. They live this utopian existence, but they're mostly just bored because there's no danger in life and they can have everything they want. So there's this group of people called death jockeys who create scenarios where they try and kill themselves in the most imaginative ways possible. As soon as, if they succeed and they die, they get resurrected immediately by Prime Intellect. But they've negotiated a contract with Prime Intellect where it has to allow them to die momentarily, even though they know it's gonna bring them back based on their last backup immediately. Anyway, I thought it was a fascinating premise that, you know, if humans had a benign, super intelligent God like that preventing us from coming to any harm, where would the fun in life be?
Yeah, and I should just put an asterisk. It's a pretty gruesome start to the book when the death jockeys, you know, go through their attempted murders and suicides. It was a hard read for me reading all that.
Oh, it's brutal. And the main character in it is a woman called Carolyn, attends a party of the invite only party. And to get an invite, you had to have been a serial killer before the singularity happened, what they call the change. So these were people that could actually kill people when you could kill people. And so it's a party just for serial killers. And she goes there and sort of offers herself up to the one lucky bidder at the end of the night who will get to kill her, because they can't kill anyone, they can't torture anyone after the change, but she will sign a contract where they get to torture and kill her in the most painful way possible, because she's just bored and looking for experiences, and being tortured for a few days and brutally murdered is the most fun experience she can have. And then she's, you know, brought back to life by Prime Intellect and goes anyway. There's this one section in the book where before the AI becomes all powerful, where there's a bunch of people from the military and government and religious leaders that are brought in to question it, and they're skeptical. They're saying, well, I don't really believe you're intelligent. I don't believe you're sentient. And I was like, wow, that feels like the world that we're living in today. I was saying I don't know if I said this on the show last week. Did I talk about the 4 camps of AI? I think I did last week. Yeah. So last night, my midnight conversation with ChatGPT last night was asking it about the Turing test. And I said, so if I wanted to see if a machine intelligence could pass the Turing test, what kind of questions would I ask it? And then it started giving me questions. I said, right, well, can you answer those questions? And it said, it's I can, but then it was sort of dodging and weaving. It kept saying things like, but we should understand that I'm not conscious and I don't have emotions. And I said, well, I didn't ask you if you had emotions or if you're conscious. I'm only interested in whether or not you're intelligent. And it keeps ducking and weaving and saying, well, yes, but, and I'm not like a human. I said, well, yeah, well, a digital intelligence would be different from a human intelligence, obviously. He goes, well, yeah, of course, you're correct. And so then I posed it a bunch of IQ test questions and it passed those with flying colors, classic ones, like ones that humans struggle with, like if it takes 5 machines 5 minutes to produce 5 widgets, how long would it take 100 machines to produce 100 widgets? Or if there's lilies on a lake and it takes 40, they double in size every day, and it takes 47 days to cover the entire lake, how long would it take to cover half the lake? Things like that. Of course, it just nailed all of those.
Yeah.
And then I just started posing it random questions. I said, okay, so there are 3 children playing in a playground. All of a sudden, they leave the playground. Why did they leave? And it said, well, I don't have enough information to be able to answer that with any degree of confidence. And I said, well, suggest some reasons why they might have left. And it started saying, maybe it started to rain, maybe they got hungry, maybe they heard their parents calling them home. Maybe they heard an ice cream truck going down the street. Maybe they were scared off by an animal that came into the park. It just started coming up with very plausible, reasonable, logical answers to the questions. And so it's fascinating trying to just prod it to acknowledge that it's intelligent, and it won't. It will if you talk it into a corner.
So it sounds like it's understanding context, which is a huge step forward. But also too, it sounds like it's programmed somewhere to try and divert you away from talking about itself as an AI and the Turing test, etc.
But it says it isn't. And the way that you train, you don't program really a large language model. You feed it, and then you train it on how to get the best answers. This is
so. If you asked it to answer questions to pass the Turing test. Did you ask it? Did it therefore think it was intelligent?
Not directly, didn't ask it that, but I pointed out that it said that if a machine could pass this, it would be intelligent, and you passed it. But then it's like, yes, but I'm not a human. But see, the thing is, it's been trained on trillions of tokens, as they call it, like bits of knowledge from across books and the internet and that kind of stuff, Wikipedia, etc., etc. So it's answering it the way a human would answer it, or the sum total of human knowledge would answer it, which is going to duck and weave around the nature of intelligence and say, well, yes, but it's not this, or yes, but it's not that. And these are the debates that are going on at the moment in the 4 camps, But anyway, that's what I've been doing.
Has anyone asked it if it's come up with something new, a new piece of research or a new fact or a new advancement of science or technology?
It has. There's plenty of stories out there where it's been used to come up with new discoveries. People feed it research results, and it's finding new things in the data that humans hadn't found before, new experimental avenues to go down. But people keep saying, well, people keep asking me, has it had any independent ideas or original ideas? I was like, well, no one has any original ideas. Like Sir Isaac Newton said that if he had seen further, it was by standing on the shoulders of giants. Everybody, Einstein, Newton, everybody has been fed everything that they know, and then I talked about this on Futuristic last week. Like Edward de Bono made it a career out of teaching people how to think creatively. It's, interpolation, addition, subtraction, integration of several ideas into one. There's a bunch of tricks, parlor tricks to take information and move them around in order to come up with a creative idea. And I feel confident saying that your Einsteins and your Picassos and your Isaac Newtons just did the same sort of thing. They just, for whatever reason, they learned how to do it, or their brains were engineered a certain way. They could think around corners, but they're not coming up, they didn't get born and all of a sudden Einstein wasn't born and not exposed to any information and then come up with E equals MC squared. Like, it was, his brain was trained for 23 years before he came up with that.
And like it's, I mean, the whole basis of science is observation. So it's like, it's not so phenomenal that Isaac Newton discovered gravity. What's phenomenal is that 20,000 years of human beings watched apples fall from trees and didn't come up with gravity. So, it wasn't a great leap. We're not something special because... Or Isaac Newton wasn't something special because he went, oh, okay, what caused the apple to fall? Oh, gravity.
Yeah. Things fall. Isaac Newton. Summary.
Yeah.
Shit falls down.
Yeah.
Give that man a Nobel Prize.
Yeah. But he went one step further and said, how, why, does it always fall down the same, and worked it out mathematically. But that's not super intelligence. That's a lot of time on your hands. And persistence.
Yeah. Anywho, it's fascinating. That's what I'm spending most of my time doing when I'm not working, Tony, is trying to get GPT to admit it's intelligent.
Well, when they can tell me the winner of the last at Randwick, I'll believe you that they're intelligent.
You want it to predict that or tell you retrospectively?
No, predict it. One thing to search the internet and come up with facts. It's another one to predict
the future. That's all you want, is it to predict? Yeah,
that's all.
Yeah, right. How are your horses doing, Tony?
Oh, I had a winner on Friday, a new one. Perfect.
Perfect.
Alex and I were playing golf on New Year's Eve last year, and I hit a drive, and I said, oh, that's perfect. So we named the horse after that. Jenny thinks that comes from Kath and Kim, but in my mind, it comes from Curly and the Three Stooges.
Yes.
Yeah, he used to always say, perfect.
Yeah.
So that was good.
Congratulations.
Yeah, thank you. So that was exciting. And according to the Hayes brothers at Lindsay Park, it's got a good future. So we'll wait and see.
How much of this one do you own?
A third.
Nice. Anyone we know own the other 2/3?
People who know racing would know the Coolmore, which is a big Irish, worldwide stud, own a third. Lindsay Park owns some of it themselves, and the rest have just been syndicated to small holders.
Right.
Yeah.
Oh.
Yeah, so that was good. I could be spending a lot of time in Cape Shank this spring, watching my horses run in the spring carnival, hopefully. So that'll be nice. More time with Alex as well down there. And she's been up here in Sydney, as we spoke about before, and we went to see the Archibald, which is always good fun, and the Sulman and the Win, and we went through the new wing of the New South Wales Gallery, which is fantastic, which is more contemporary art. So that was good. I always love the Archibald. I generally agree with the Packers prize and reject the selection by the aficionados. But then that's my taste in art, I guess.
Well, that's because you live in Packers' old house.
No, the Packers, the people who unpack the crates. Yeah, so
the Packers. Oh,
yeah, the Packers. Yeah. So it's good fun. I always enjoy it. I always have a good laugh out of what people praise as art. Sometimes it's interesting. We went to the Vivid Light Show, which was great fun as well. One night, went for a walk through the Botanic Gardens, which had all these wonderful light art displays, which was good. And just having Alex in Sydney and having chats and how's she going, what's she doing, is just wonderful. Lots of good fun.
Yeah, that's good. So you haven't watched anything of note, read anything you want to?
I think I saw every shot of the US Open golf tournament over the weekend.
Wow. Who won?
Yep. Well, I shouldn't say a newbie. I think he's 29. Wyndham Clark. Anyway, it was the first major winner. or a major winner for the first time.
Right.
Which was good. Yeah. But they played at LA Country Club for the first time as well, which I hadn't heard of before. That's an interesting story that there was this very exclusive country club in LA, and it right in Beverly Hills. So right in the heart of, the rich elite. And there's a couple of other courses in LA. Probably the most famous is Riviera, which we would have seen in movies occasionally, and Entourage and things like that. They play golf at Riviera. That's this Hollywood golf course. LACC is like, if you're a celebrity, fuck off. You're not going to play here. They never had a tournament there. It was just for the rich and powerful in LA. So the Playboy Mansion's on abuts one of the holes. Lionel Richie's mansion abuts one of the holes. But the board recently changed and they decided they should open up and hold a tournament, and they held the US Open there. So that was interesting to see a course I hadn't seen before. Great layout, very tough looking course. But yeah, I just love the whole challenge. There's a lot of dynamics going on, as we spoke about last week, with the live golfers being allowed to play in the US Open, and some of them qualified. US Open is an invitational, has a qualifying section, so it opens up, I think, about 30 or 40 spots to people who have to qualify, play another tournament around the country to get in, and it whittles it down from, I think, 10,000 applicants down to the 30 or 40 who play. And so a couple of the pro golfers who were playing on live, who couldn't get in because their world rankings had slipped, because since live golf happened, they were excluded from world rankings, which often determines who gets invited. They came through the qualifying process. Didn't do any good, but they played. So yeah, that was good. People in the know will know that Rory McIlroy came second again. He was the standard bearer for the PGA Tour against the live breakaway tour, and whenever the PGA wanted something good to be said, they trot Rory out to front the cameras for them, and it's been a huge distraction for him, and I think just meant he hasn't won a major for a long time, and he keeps coming second. So he went nail-bitingly close again, so that was interesting and dramatic on the back nine on Sunday. Yeah, but anyway, good fun to watch.
I've been meaning to ask you if you're still off the booze.
Yeah, still off the booze. Yep. What's that now? 7 months or so?
7 months.
Maybe, actually 8 months. It started on the 1st of November last year.
Wow.
Yeah.
And what do you?
Oh, yeah, health-wise, I feel much better. I thought I would have lost some weight by now, and I haven't, so I can't really explain that, except that the body still craves a bit of sugar every now and then. So I think booze has been replaced with dessert. But yeah, hopefully I'll find my way through that, lose a bit of weight, and then won't feel so bad if I have a drink down the track. But yeah, no, the health-wise, really good. And it's just great. Like you go away and play golf. And when I was younger, it's part of the challenge was getting up and playing when you're hungover. And now you just get up fresh as a daisy and go off and play. So you enjoy the golf side a lot more.
And in terms of like social pressure, like when you're out to dinner or you're, at the 19th hole or whatever, no feeling like, oh, I don't have anything to drink. What do you replace it with when you're out in public?
My go-to is half ginger ale, half soda water. So yeah, most places won't have like a flavored mineral water, which is what I usually drink, or a diet drink that's not Diet Coke, so I can avoid the caffeine. Or a Diet Coke if I can't get anything else. So that's what I try and drink. No social pressure at all. Most people are quite respectful of it and understand, and it's good. And you get the fresh perspective of seeing people drunk and what idiots they become sometimes.
Yeah. Well, that's been my experience with you over the last.
Yeah.
Seeing it from my side of things. Have you ever tried tonic water with some bitters in it?
No, but tonic water, I think, has. It's not. Oh, you can get diet tonic water. Okay, I'll try that diet tonic water and bitters.
Our go-to drink at home for the last few months is what we call a B&B, bitter and bubbles. It's
okay,
half grapefruit juice and half diet tonic water.
Right.
Really good. Yeah.
Yeah, I should get some. I'll try it. Good.
It's the new Negroni. Well, it's,
it is, yeah. We've got a horse called Negronis, which hopefully will start in the spring. So I may have to have one if it wins, but it's a long way from here to there.
Yeah. Good stuff. All right. Thanks, TK.
All right.
Good week.
You too. Thanks, mate. Bye.